friends, we now have a group discussion, an insightful one, about product selling or concept selling. Is it time to push it as concept, or is it move down to a product? That's what the topic is about, and both are right and both are wrong. But to evaluate that, we have an excellent moderator to help moderate the panel. And the moderator is none other than past president of IFA Galaxy, Mr. A.K. Narayanan. A.K. Narayanan, as you know, is no stranger to all of us at IFA Galaxy, but it's my role to give a brief background. He has over 30 years of experience in the investment and capital market space. After his initial stint in the corporate world, over the last 2 decades, he has been an investment advisor, very active in the social side of things. He was part of the Tamil Nadu Investors Association. He was the president and did various roles, apart from being in the IFA Galaxy's team. Man who gives a lot of his time and energy to help others grow. And that's A.K. Narayanan in a nutshell. He used to be an MFD, recently kind of sold his enterprise to a Kfintech. Now he is a coach, trainer, and is kind of helping other IFAs and people understand the space better. So that's A.K. Narayanan in a nutshell to all of you all. Of course, he's a chartered accountant by education. So with no more ado, I leave the floor to our dear friend A.K. Narayanan. Over to you, sir.
So good afternoon. I welcome you all for this 12th IFA Galaxy Knowledge Summit. You all must have seen that IFA Galaxy has been conducting programs year after year, and 12th year being, again, we have to resort to video conferencing because of the COVID restrictions. Many of you might have seen the past videos or attended the IFA Galaxy summits as well. We always try to bring in the best of the speakers for the MFDs who are present in our summit so that they get the best. And this year is no different. And we are going to have a galaxy of speakers in our panel as well. Today's discussion is revolving around product versus concept selling. We have eminent speakers this afternoon for MFDs to understand what is product selling and what is concept selling. AMCs, they keep coming out with NFOs at regular intervals. And MFDs are trying to reach out to the investors, understanding many a times their requirements and giving them the requisites. To understand things better, let us go over to the first speaker of the afternoon. I would call upon Mrs. Roopa Venkatkrishnan to speak to us on the topic of product versus concept selling. And before that, I will introduce her, although she needs no introduction to IFA Galaxy Group, yet it's my privilege and duty to introduce her. She's the director of Sapient Wealth Advisors and Brokers Private Limited. She works out from Mumbai. She's very passionate about financial literacy programs, investor awareness program, and she's always readily available for reaching out to the investors and MFDs to give whatever help possible from her side. She's in the industry since 2003, and she's also a founder member of the FIFA National Forum, which has been formed for the benefit of mutual fund distributors at large. I have great pleasure, Ms. Roopa, in introducing you to this audience. And let me start with the first question to you. Are MFDs chasing returns for creating alpha by offering thematic products or to satisfy the investor? What do you think is happening now?
Very good afternoon, and thank you so much, AKN, for giving me this opportunity. And I would like to congratulate IFA Galaxy for their 12th year of your annual conference, and I've been party to most of your conference. You all have been conducting this extremely well, and it's been very useful for MFDs across the country. It's been an honor to be on this platform, AKN, and with regard to the questions that you actually raised with regard to MFDs chasing returns, I think most of us focus and feel generating alpha is a primary objective when it comes to investment. But while we look at alpha, most of the clients don't even have beta into their portfolios because we keep chasing alpha, looking at the past returns. It also is very essential for all of us to realize after so many years of last 20 years of this mutual fund industry, I think the mutual fund industry has given phenomenal returns. It has created and generated huge amount of compounding of wealth for investors. The difference is there are returns. There is a difference between a folio return and a fund return. There are wonderful fund returns which has happened in the last 28 years of the mutual fund industry. But the folio returns of the investors have not been there for the reason because most of them have moved in and moved out of chasing returns of the past, looking at the past returns. So it is very, very essential saying that we understand saying that long-term compounding is very essential rather than chasing funds and getting alpha. With regard to thematic funds, especially that you have been talking about, I think thematic funds, are they good? Yes, they are good. But to that extent, what is the kind of dose that you take? It's like going to a doctor and you saying you're not well. The doctor prescribes a certain amount of dose that you can take, and each individual will have different doses that the doctor give as per his illness. In the same way, with regard to giving thematic products which are available in the industry, every client has a risk-taking ability into his portfolio. So if we have a standard asset allocation of allocating 5% into thematic funds into the client's portfolio, that will be more meaningful for the clients to be there rather than taking extreme risk. I don't believe saying that giving more thematic funds is going to add alpha to the client's portfolio. There will be a huge amount of risk also you will be adding to the portfolio. So it's very important that you stay grounded, understand the risk return on the thematic funds. I'm not saying they're not good. They are good over a long period of time, but it depends. Each of them will have different appetite to absorb that particular into the respective portfolios. So we need to be meaningful of that. And I basically believe if you have a standard allocation of 5 to 10% of thematic funds into client's portfolio over a long period of time, I think they add value to the investor's portfolio.
Thank you. Thank you, Ms. Roopa. Thank you for your good words about IFA Galaxy. Now I call upon Mr. Umesh of Samco to talk to us. I will also introduce Mr. Umesh Kumar Mehta. He is presently the CEO of Samco Mutual Fund. They have launched their recent mutual fund now. And Mr. Umesh has been working with Samco Group for over 15 years. And he has been a master in equity. And he has got a wide experience in analysis of business models, analyzing the balance sheets, profit and loss account. And he has been a complete equity player for so long. And we are very, very fortunate to have Mr. Umesh this afternoon. So Umesh, I just wanted to ask you the first question. Having launched the first NFO from your AMC, will you also try to fill the gaps like many other AMCs, or you're going to look at few of the funds which will help the investors in the long run? Over to you, sir.
Great question. Trying to will we fill the gap? See, every human being on this planet would like to have maximum remuneration for the time that he exchanges. And this is across everyone. So every investor also wants, if he's investing money, he wants that kind of return. No one wants to compromise. They want the best return that their investment can offer. And that's the hidden psyche. Second, if you ask investor, would you like to take more risk? Obviously, the answer is he also wants to take bare minimum risk and in turn also get high returns and lower volatility. See, volatility also is an inherent need of every investor. Lower the volatility, the better it is for investors' long-term health, and he will be able to stay in the game for long-term. Higher the volatility, there is a risk he might sell. So therefore, there are these three basic requirements: high returns, low risk, and low volatility. So if this is what investors want, and if that kind of portfolio is delivered to investor what he wants, then it is not necessary to fill in all the gaps, or to, for that matter, have every product in every category. Because eventually what investors want, and if we are able to fulfill that through a limited set of offerings, and I think as a manufacturer, our purpose is solved. So give investors what they want. So with that thought process in mind, our focus is, let's not get into all sort of categories. Let's deliver a product which essentially is a need what investors want, and let's focus to limited set of products. If we have a uniquely differentiated product, that makes sense. But otherwise, repackaging in various categories, there is no point, because eventually we want to add value to our investors by getting those three things. So that can be done through limited set of offerings, and that's our thought process.
Thank you, sir. Now I'll call upon Vignesh to talk to us about his technical aspect of what is happening in Kfintech. Vignesh Kumaran, he works for Kfintech and head of products, and he is very, very passionate about creating solutions. Here also, he works with the same methodology of creating product solutions. And before joining Kfintech, he has also had a stint in Kotak Mutual Fund as well as ICICI Mutual Fund. Welcome, Vignesh, to this seminar. And I would like to ask you the first question. How is Kfintech managing huge volume which has come about recently? Was it a big surprise, or you are able to do it with much ease?
Thank you, sir. And first of all, thanks for giving us an opportunity to present at this forum on the 12th IFA Galaxy event. I've been a very serious follower of IFA Galaxy for the last 9 years. And this is for MFDs to get rejuvenated in terms of various thought process. So thanks for providing such a great opportunity in the industry. And going to your question on whether the volume has been a surprising volume, yes, it was a sweet surprise to have always. Our transaction volumes from 2020 December till date has almost grown as 2x or slightly over 2x. But the way what we could handle this thing is the digital volume on the same period has grown up 6x. So the digital transaction volume today, what we handle is almost 70% of the entire pie. And 30% is what we typically get from the paper-based transaction, which comes from various different sources. And to handle that volume, thanks to the COVID situation, which made us to think over such scenarios in the future also, where we could do a lot of process automations from our end. So introducing technologies like ICR, OCR into application reading, so which typically reads a lot of applications, especially the NFO period. So whereas Mr. Umesh would acknowledge, I believe, during NFO, when there's a spurt in the volumes, typically the last day of the NFO, where there is too much of transaction office. So how do we convert the transaction properly within the given time frame? So we used process technology automations in this case. We have a separate dedicated team for it. And with the spurt in the number of NFO, which has been on the move in the last financial year, we created a dedicated NFO unit, a specialized unit. So that will help the AMCs and the distribution channel in two ways. So we started building products which is very NFO specific here, which is contributing to a larger volume. And something like creating a QR based or transaction badge where an IFA can start to issue a one page or a leaflet which has a QR code with its ARN code and the product code hard coded, which typically reduces a lot of transaction which happens on a paper based manner today, because typically it goes in terms of a pre-filled form from the IFA's office to the customer, which takes care of these kind of aspects. So we started involving into the NFO process and started to create products which will help the entire ecosystem to build things forward.
Oh yeah, thank you very much. Now I'll call upon Susmit Patodia to speak to us. He's coming from rich experience of equity. He has worked for Motilal, Oswal Financial Services, and also earlier a stint in Edelweiss as well as Franklin Templeton. He is having a master's degree from Institute of Management, Bangalore, and having 14 years of equity experience. Now, Mrs. Susmit Patodia, you're going to tell us about various funds are being launched by various fund houses. The last 6 months, if you look at it, many investors were asking MFDs whether they should also look at international funds, whether it is a part of diversification or part of thematic allocation. I have no idea, but a lot of questions are emanating from that. So do you feel international funds make a great strategy for investors?
Thank you for the question, and good afternoon, everyone, and good afternoon, sir. Thank you for having me. It's a privilege. It's amazing how you compound, even these events become such landmark events. 12th is a phenomenal achievement. Congratulations. Coming to your question on international funds, it's like asking a barber if I need a haircut, because we run the largest NASDAQ fund in India. So my answers would be a little biased. But the important thing is, and one thing that we've always said is, never invest in any fund, especially outside your area of competence. So let's say international fund is outside the area of competence of Indian MFDs, just because the last year return was good or the last 2 years return was good, right? I think Roopa ma'am made a brilliant point about fund return and folio return, right? You must have seen the WhatsApp on ARC, right? The fund return is fantastic, right? You take a 5-year fund return of ARKK, which is the ETF that has all these new gen stocks of the US. It's fantastic, but the folio returns are very poor because most of them come towards the end of the rally, right? I call it investor return and investment return, right? Investment return normally looks good, while investor return is normally lower than investment return. So I think if you approach it from a diversification perspective, right, then it's a great strategy. But if you approach it saying, oh, last 1 year NASDAQ was up 100% and I missed it, and hence I should have it in the portfolio, that I would say is fraught with risk. So if you have the discipline that it should be diversification, and let me tell you, sometimes diversification also means not having good returns, right? When you diversify, the objective is not that everything should fire at the same time. Then you have not diversified, actually, right? So there'll be some parts of the pie which may not do well, and you have to live with that, right? So as long as you deploy in international because it is diversification and not because you're chasing return, and that is that honest question that every MFD should ask the client, right? Hand on heart, why are you investing? Is it because NASDAQ is up 100%? Or do you truly believe that I should diversify into US? Or, for example, today, it would be very interesting if somebody wants to invest in a Russia fund, right? As a diversification tool, the index is down 25% in a week. I'm guessing it's impossible to sell any client a Russia fund today. But somewhere this is also a kind of diversification. So yeah, I would say diversify for the discipline of it, not for the returns.
Thank you. Thank you. Ms. Roopa, I think we'll come back to you now. What do you think are the main function of MFD while offering products to investors? How it suits the investor requirement? How is he going to look at when he is having so many themes and so many funds available in the market?
So again, it's very important to know, saying that you have 45 mutual funds, more to come. Each of them are in a business, right? They are going to come out with products which are going to be there on their shelf, because that's what the client wants, and that will always be on the shelf. It's like walking into a supermarket and you have everything available on the supermarket, but you're only going to take what suits you for the client for your long-term, short-term needs. Correct? I think that's the basic important all of us as MFD should know, is saying that what is that you want to take out from each of the funds and fund houses, and see that how do you build that portfolio. As Susmit rightly said, saying that when you do asset allocation, the main reason to do an asset allocation into a client's portfolio is to see that your portfolio is cushioned during the period of your investments, because each investment, which could be small cap, mid cap, large cap, growth strategy, value strategy, international fund, China, US, Brazil, you will have different strategies, but each of them will work at different times of periods, and you don't know what will work when. So it's very essential, saying that you cushion the investment by asset allocation, because each of them will have cycles. But manufacturers who are mutual funds are going to come out with products which are there. But you need to find what suits your client's portfolio is the most important, essential part of it. Because I believe portfolio construction is much more important than generating returns. Because portfolio construction doesn't give you returns, they give you exponential returns over a period of time. And that's the basic in the last 20 years that I have understood, is sticking to basic fundamentals with an asset allocation gives you phenomenal way of compounding. And you would don't even realize how the portfolios have even generated alpha over a period of 15, 20, 30 years. So it's very essential, again, that every MFD should understand, saying that manufacturers are going to manufacture. We need to find what suits us and the client's need and build the portfolio.
Thank you. Now we'll come back to Mr. Umesh. What, in your opinion, is good for the investor? Is it a plain vanilla diversified fund, or do you think thematic fund can do better? Like what we are hearing, sometimes thematic does extremely well. So the investor feel at a loss. Why I should have invested in pharma fund? Last year, IT funds did so well. We missed out in IT fund. Do you think all these things are clubbed together at some point in diversified fund is also capable of delivering returns?
See, in last 30 years, when we do a statistical analysis, the number of NFOs that have come in the market, so substantial NFOs in past from at least 20 years have come at near bull market tops, or markets were in euphoric stage. So that's the time we have had maximum number of NFOs. So, and especially when thematic funds are launched, so that's the time the narrative or the current fashion, for that matter, has already played out, and that's the time a manufacturer brings out those thematic funds, because that's the time it will sell. So therefore, as a matter of from investors' perspective, if they are intelligent enough and if they can allocate asset, if they are able to understand asset allocation at their source, then it makes sense. Basis their understanding that, okay, a part of my portfolio needs to be in thematic fund, then it's all right. But broadly, generally at large, investors will be better off investing in a well-diversified portfolio rather than going for thematic funds.
Okay, thank you. Vignesh, now let me come back to the second question. Can you elaborate whether the transaction entered now, because you said digital is 6x and or in physical mode, what exactly is the ratio in the past and what is the current ratio now? When you say 6 times the digital transaction, what exactly you are meaning by that?
We are processing roughly about 2 crore plus transactions in a month. So of which earlier the transaction pie earlier used to be 1 crore transactions. I'm talking about prior to COVID. And this COVID, when I'm saying COVID, that's just a landmark. It's 2 years prior to this. So our numbers used to be 1 crore transaction we used to process, of which 50 lakh used to come from online sources. It could be channel sources, or it could be platforms of the respective AMCs. It could be Kfintech's platform, exchange platforms, etc., etc. And today the ratio is the number of transactions we are processing in a month has gone from say 1 CR to 2 CR or 2 CR plus, of which the total digital transaction we are getting has grown up from 50 lakhs to roughly about 1.4 to 1.5 crores in a month. So that's the kind of volume that we are processing. This is due to the urge of most of the MFDs to create their own platforms or associate with one of the platforms where they will get a digital flavor for servicing their clients. So this has supported us. And this trend, we see that it is going to again grow up because most of the people are investing heavily on the digital space today. So we expect these numbers to grow up.
Thank you. Now, coming back to Susmit, see, there is always a general question. I think Mr. Umesh made a remark about the return, volatility and all that. Now, investor, whatever you say, he wants return. He doesn't care much about, even if you say don't look at last year, 2 years and all that. Okay, fine. But ultimately, he'll come back to return. He will immediately ask how much I'll get. You can say that we cannot do forecasting. We cannot say forward-looking statements. All kinds of things we can say. But he will ask, because he says, bank is telling me 5.5% they are giving me in State Bank of India. But you are saying you won't be able to tell me what it is. Then how will I invest money there? This is what they generally ask. So now taking this into account, and he doesn't like volatility also. That is, let us understand that. The moment you put the money and money starts going into negative, again he starts asking us and calling us and all that. He doesn't want negative returns as well. Although we say next 3 years, 4 years, if you don't want the money, put it in the equity. All things are said and everything is standard. We are educating them. AMC is telling us everything is in place. But how does AMC help MFDs offer right products? Is there anything called right products to offer to the investors?
I think the right product is always in the hindsight, right? Which is, you said the highest return product is the product that you should have sold to the client a year ago, right? So it's almost impossible. And if any of us knew the right answer to the right product, we all would be sitting in our large villas and doing this call rather than sitting in our small offices. But I think what is important is to first de-sell or to say the risks about whatever you sell. And in my experience, if you tell the client that historically, if you see month-on-month returns of equity markets, for the last 20, 22 years, I've done this data, 43% of the time, equity markets give you negative return. 43%. Okay. 57% of the time, the month-on-month return is positive. This is the fact. Despite this, you get a 16% CAGR ex-dividend for the last 20 years. I think this fact should be told to clients again and again that in equities, if you look at your return statement every month, 1 out of 2 months, you will feel sad.
Correct.
Right. Great. But at the end of 20 years, it compounded 16%. Right. The other small thing I would
I think what you're saying is long-term and patience wins the game. And I think those two things are very important. That's what I presume that's what you want to convey, isn't it?
And sir, the other important thing is 1 out of 2 months, you will feel bad about being in the market. This is the fact. Nobody can take it. I mean, we cannot undo this. This is the, as we say, the truth of the last 20 years or the 240 months, right? So this is something that investors have to understand. MFDs, partners of ours have to understand. And the second and most important thing, I think, is I always say that investing is like marriage, not like dating, right? You have to marry the most optimal person, not the most beautiful person, right? We all want to marry, the most good-looking women or men, but can we spend the life with them? We may not be able to, right? But if you marry the right person for you, you can spend your life with them. So if you as a client believe that I can't have more than 40% equity because I cannot take that drawdown, then it's fine not to have more than 40% equity. And as Roopa ma'am said, to stick to it over the next 20 years is more important than trying to choose the best. So marrying what is right and remembering that 1 out of 2 months you will feel bad about being invested in equities at least.
Thank you, sir. Thank you very much. Ms. Roopa, I think I want to ask you a simple question now. Everybody talks about solution-based investing. A lot of AMCs are coming out with, retirement funds and children's fund, education fund, or whatever. Different types of funds are coming now. Maybe over a period of time, you will see international travel fund also might come as things go. We don't know. So, should MFD offer solutions or products to investors? And are we moving any point of time towards solution-based investing?
So the basic, again, the first thing is the basic premise when a client comes to us. He's coming to us so that we can help him, with a solution to create wealth for him for his long-term, short-term needs. That's the first premise that we all need to understand, saying that he's coming to us for a solution to help him to create wealth and also navigate that entire journey of 15, 20, 30 years where he's going to reach his journey of retirement, could be children's education, or it could be a short-term need for a holiday that he's planning after 2 years, or he wants to buy a car, a home, whatever it is. It all has to be solution-based. Now, when it is solution-based, obviously the MFDs need to understand this and provide the respective products which are available that suit the client in a long-term, short-term goals that the client has. Now, selling products, your relationship with the client is going to be very short-lived, because you can sell a product which with a base of a return, but that is not going to build your relationship, or neither it's going to build your business or a practice. If you are a serious practitioner as an MFD, I think what you need to provide is a solution, and you are building a relationship with the client for the next 15, 20, 30, 40 years. In some cases, it will be a second generation, first generation, second generation, third generation also, which you build over a period of your career. It is also very essential saying that investment is all about handling emotions of investors. It has nothing to do with the products. Because I have been a Nick Murray fan for the last so many years, and I only understand, and that's what he says, 90% of your returns only come because you are in an asset class called as equity. It is not which scheme, which fund, or it is a thematic fund or anything. It is just sheer because you have an allocation to equity and you stay allocated to equity for the next 15, 20, 30 years, you will create your wealth over a period of time. So 100% I agree with you saying that it has to be solution based and it cannot be product based if you are into a serious practice of your business.
Thanks. Great. I think that is what everybody is driving today, that equity as an asset class has to be looked at for anybody to create wealth over a longer duration. And they have to stay invested, having a good patience and looking at long term. This is what the message we have been trying to push it. And I think at some point or other it will happen. Now, coming to Mr. Umesh. Now, do you think the index-based fund is catching the fancy of the investors? Because we are saying that passive investing is coming back, passive investing is there across the globe, but in India also is catching up and all that. Do you think that it is really catching the fancy of investors?
So, National Stock Exchange, they have this company subsidiary which publishes index, and in their studies they mentioned that large number of funds underperform benchmark and so forth. So when this comes, when this published across in media, and then investor starts to question why I'm investing, why should I pay active fee, what's the kind of return, etc., etc. So broadly, because investors is also bombarded through various means and through other online startups that they have interest in selling index funds. So those are the kind, when investors are put to notice, look, this is what is happening out there in some of the funds, and I'm pretty sure some of the funds might be underperforming, but good number of funds are actually delivering that kind of return. So now the investor keeps on, then he hanging that, let me go for index, at least I will save on the cost. See, because every investor, or for that matter, every human beings also want to reduce their cost, whether or not that is a sane thing or not, that's a different thing. But cost saving, when everyone says, at the first prima facie view is that let me save cost. But then at the same time, today, India, there are a lot of opportunities, and there is space for active funds also who will be able to outperform benchmark indices, and those are the kind of funds investors will keep on flocking. But to a large number of funds, if they think that returns are not up to the also benchmark, then those are the kind of funds we will see some headrooms and some difficulties, and investors might also want to switch to index or passive fund. So I think both pockets will be there across. We have seen this across the world, and India also. We will have both the bouquet for investors, but eventually then this is for the manufacturer to see, how better are they able to meet the expectation and deliver the kind of return, and as I told, generate high risk adjusted return for the investors. So those are the funds will keep on adding value to investors, and they will keep on gaining AUM. But those funds who may lag are the ones we will see that money will be shifted or allocated to even index or passive funds also.
Thank you, sir. I think what you're saying is correct, that both are going to coexist, and things are going to be like this. Now come to Vignesh. Our SIP collections are on the rise. Are you ensuring encountering any servicing issues either from MFDs or from investors? And if so, can you throw some light how you are overcoming these issues, because the volumes have gone up tremendously?
So when it comes to SIP, we have a set of fixed problem that we had always been encountering from the general digital perspective when it comes to the standing instructions. Because typically when we see the data of investments coming on SIP where there is a biller registration process which happens, so typically only 50% of the customer go back and register the biller. From the customer perspective, he has completed the SIP, but actually he did not complete the standing instruction. So end of the day, the SIP has happened but not happened kind of scenario. So now what we push towards is we are now modifying our journeys where today the online mandate registration is on the rise. We have got a decent segment of banks which is already there, and this list is going to go up because as per the RBI mandate, all the banks are supposed to participate in this scheme. So we are navigating the journey in terms of creating more online mandates. So that will cover the drop in the SIP volumes, which has typically been a business loss or a thought which has been approved by the customer, but end of the day, because of operational nuances, the SIP doesn't kick in. Apart from this, we are also working seriously on reducing the tag for registration of the SIP today, which is by introducing some process automation layers so that there will be more room for the MFDs or the investors to start subscribing to an SIP. So these are the two areas which we know there is a gap, and we are seriously working around this.
Thank you. Ms. Susmit, I think we will come to this. Do AMC provide MFDs any tool for empowering them to make unbiased decision making? A lot of MFDs are looking forward for empowering them. Of course, we are talking of digital, we are talking of technology, and we are also getting a lot of inputs from fund managers when they come and address the MFDs. But apart from them, do you have any tool which you are providing or which you are in a process of providing to the MFDs to empower?
I think MFDs are more empowered than AMCs today in terms of the information and all the data that is available. I mean, it still amazes me that PMS returns get calculated and tabulated now faster than what AMCs themselves do. PMC was supposed to be a very personalized OTC, nearly over-the-counter product, and now we are in an era where, in terms of information flow, there's hardly any difference between PMS and MF. So I think what is unbiased? That itself is a very, very interesting thing to think about in our industry, because everything is a promise, right? As Mr. Umesh rightly said, we are all promising something in the future, which is, it can be risk-adjusted return being higher than the index, but everything is a promise. When everything is a promise, how can I tell you whether it's biased or unbiased, right? Nobody, let me tell you, no fund manager intentionally underperforms, right? No fund manager ever starts the year saying, today I'm going to this year I'm going to underperform. So, right, despite our best and honest efforts, sometimes we don't do as well as peers or benchmark. Now, in that case, it becomes very difficult to be biased or unbiased. The only thing that I would say is I think SEBI has done a fantastic job in making sure that all of us are quite unbiased, at least monetarily, to behave in the interest of the client, right? I think when they introduced the lower fee as the AUM goes up, it was a little surprising, but the way it has played out is very interesting, because as the scheme becomes bigger, it actually becomes difficult to generate alpha, right? And so as a percentage of the returns that you make, you should not charge such a high fees. So I think it's very interesting what SEBI, what they thought. I'm sure they had the wisdom to see what they did, and it ended up being what it is. So very difficult to give any unbiased, but all I can say is that, and I'm being honest, right? I don't want to talk about something that we.
Yeah, I know that. No problem.
We can't.
Thank you. Thank you. I think we have come to the last phase now, the last 5 minutes. I think you can tell us in less than a minute or so what, in your opinion, the MFD should do, and we'll be very happy to hear you. Mrs. Roopa, I think you should start now. I think general piece of advice to the MFDs going forward, what, in your opinion, should be done for them to secure their investors and have more trust with them, and the investors' experience, how to make it a little more nice.
So, again, you know me, for the last so many years, I've been very basic, and I've been everybody. Bringing down expectation of returns is very important when you have a communication with the clients. I think last 2 years returns have been aberration. It happens once in 10, 12 years. And these kind of returns are not going to happen in the next 2 years. On the other hand, there is a huge opportunity of a lot of people who have gone and done mistakes in the last 2 years, who are going to come back to everyone for advice or guidance to see that they are able to scale through and reach their goals and navigate this entire journey. So the MFDs are going to have huge opportunities, but it is very essential for most of the MFDs to bring down expectation of returns. Clients are going to come and ask you, saying that what they want to invest in, it could be an international US fund, or it could be a fund in Europe, or it could be an Indian fund or a sectoral fund, or, the favorite today's commodities fund, which people are talking about. But there are a lot of times you can say no, which is not right for, I think most of us don't. Half the time I have to tell clients, no, don't do things. And that is what we avoid. And I think most of our journey of investment is telling clients not to do a lot of things. I think that will bring sanity into the client's portfolio, and sanity also for the MFDs for the long-term wealth creation journey that he builds in the client's portfolio. And I personally want to tell everyone saying that there's a huge opportunity. I think next one decade, next 1 or 2 decades, I think it's going to be India. There's a huge opportunity. Technology will be an enabler to see that we grow tremendously, and the manufacturers are going to bring in a lot of opportunities on the table for the clients to choose what they want to invest. And it is going to be a huge opportunity for the MFDs to see that they can grow their practice tenfold, but they have to be truthful, they have to be knowledgeable, and they have to be alert and agile for the needs of the investors. That's the most important thing: agility, knowledge, information. I think these are the 3 important things that we have to look into for the business practice to grow. And I think the sky is the limit that one can grow. Thank you.
Thank you, Roopa, for your wonderful words. Now, Mr. Umesh, can you have your closing remarks?
There is one thing the distributor fraternity should look at is what is the underlying assets that is generating that kind of return, because eventually all mutual fund investing boils down to what are the underlying businesses that fund is owning. That is where the crux is. If they are seeing 1 year, 2 year return, there is every likelihood that the fund is owning cyclical stocks, because cyclicals have got high. So when they run up quite fast. So but investors, as I told you, also want lower risk and lower volatility. So at times cyclical will do fantastic, but at times they will correct massively, and that's the time investors will get panicky and he may not be able to withstand the drawdown. So what are the kind of assets that the fund is owning, and how wealth will be created? That is the real crux. And once they understand that, look, these are all secular compounding businesses with a lot of durability, low debt. During bad times, will the business survive? Will they be able to manage their cash flow? Is the balance sheet strong? Corporate governance. So all those things broadly, if those are the kind of businesses that the mutual fund is owning, then I think the returns are necessary, are the result of all those assets. So that's the crux. So instead of looking at past return or what has happened, but if they focus on understand businesses, I think that is one key trigger for building wealth, and that's how future of investing is all. And that's time they will be recognized that, look, today when we are investing, these are the great businesses and we are investing in. So that's how wealth will get created.
Thank you, Mr. Umesh. Mr. Vignesh, what is your closing remarks?
Thank you, sir. So, as Roopa was mentioning, there is an enormous potential here awaiting for us to grow. And we are more than happy to partner with both the AMC and the distribution community here. And we already started creating a huge roadmap from our end to support the MFD this year. There will be a lot of new things that we'll be doing in this next 12 months for supporting MFDs. One of the things we are starting with is creating a consolidated platform where the MFD today who are distributing MF from our platform can also start to sell NPS scheme, which is on the rise. And we feel that could be a good opportunity because there is a lot of inquiries which is happening across the net, which I see on NPS. And to sweeten the deal, PFRD has recently doubled the revenue share for distributing the MFD on NPS. And also they have liberated the rules for people to enroll themselves as an NPS agent here. So currently we at our portal have joined hands with ICICI and HDFC as an POP where the distributors can enroll themselves and start distributing products. Apart from that, there are quite a few number of products which is an aid to the distributor community to expand their business, and also the product which will be targeting to the distributor themselves. Something, for instance, the Insta brokerage calculation, which is typically one of the kind, which will be spreading across all our fund houses in the next 12 months of their interest. And how do we innovate products which will be making the immediate life of the MFD easier? Because when we see MFD, there is that's a large gradient of people. So we wanted to cater to everyone and be a value creator in the space and support the business as usual.
Thank you. Thank you, Vignesh. Now, Mrs. Susmit, for your final concluding remarks.
Thank you. I think this is, really the decade of India. We will be the fourth country to reach $5 trillion GDP. I think we underestimate what this decade is going to do for India. Right? There are only 3 countries which have made it to 5 trillion. We are the 4th country. Just imagine there are 210 countries in the world. Right? So it's going to be a phenomenal decade. We are all lucky. We have won the ovarian lottery literally to be in this decade. We just need what I call stupidity prevention program. Right? We don't need to do anything outrageous, anything highly. We are thankful we don't have any leverage products. We don't have any of those funny products that you have in the Western world, knockout option, this, that, right? So just believe in India. And I think Mr. Rakesh Jhunjhunwala keeps saying it, that the biggest tragedy of Indians is because we are so intelligent, we don't believe in it, right? So I think the first thing is to believe in India. We will reach $5 trillion GDP in spite of the government. And if we get there, this world will be very different. We will be very different. So, I always say that our channel partners, they just need to add 10% of their AUM every year, and their AUM will be 10 times, right? That is the power of this compounding and the book business. So it's a fantastic decade. I don't think we are not. There's very little probability that we want to make it. We're going to make it. And this is just the beginning. Trust me, we are only talking about public markets today. I think in 3-4 years down the line, MFDs may not have enough time for public market. And I keep telling this to my firm that my biggest worry is when people like Narayan sir, Roopa ma'am will say that, AMCs, we don't have time. We have VC funds, PE funds, growth funds, structured funds to market to our clients, right? That is what the opportunity of different classes of equity will become. So first, believe in India. We'll be the 4th country to reach $5 trillion. And don't forget your listed equity friends.
Okay, thank you. That's a good word of motivation to all the MFDs present here. Thank you, Mr. Susmit. Thank you, Mr. Umesh. Thank you, Mrs. Roopa. And thank you, Vignesh. It was a wonderful panel discussion. We had a lot of takeaways. And it looks to me at the end of the discussion that both are going to coexist, whether it is a thematic fund or your regular funds. But then it depends on what the investor wants and what is his goal and what is his objective. And like Mrs. Roopa was saying, the world is becoming bigger and bigger, and India's pie is going to become much larger than what it is. And our saving habits and healthy financial habits and our push from SEBI, AMFI, AMCs and MFDs will only take things much better in the days to come. On behalf of the organizing committee of IFA Galaxy, I would like to thank each one of you present here and spend your valuable time for giving us this nice evening. And I'm sure that MFDs will be enjoying your talk. Thank you very much. Goodbye.
Thank you. Thank you.